I think the Fed's going to be able to get inflationary pressures to subside, but at what cost?
They're not at levels where one can say we can declare victory now.
Over the next 3 to 6 months, we still have a lot of monetary policy tightening ahead of us.
It may be some time before we get back to low rates.
I don't see 2% rates coming back anytime soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Mr. Ferro off on that paper, the FTSE and the Dow, really acclaimed. It's behind JSTOR, folks. Some of you asked for it. It's behind a passcode on JSTOR. Anyways, Ferro is off, and we are here. And, Lisa and I, we put our heads together, and guess what? We're considering it Pivot Thursday. There is so much going on this morning. We will go to London here. Lizzie Burden briefed here on the huge movable feast of the collapse of the British government. We're not there yet, but, there's reports coming in. I saw something from Sky moments ago. But, Lisa, we have got to go over to the bond market, which 2 days in a row pivots to higher yields.
This is front-loading Thursday, right? This is basically this question of Jim Bullard coming out yesterday with Kathleen Hayes saying that they really need to front-load. This has been the theme that we've heard, although some say that they're going to also continue after that. Nonetheless, that two-year yield has really been parabolic. We are almost to 4.6%. We are pricing in 5% Fed funds rates next year. This is a game changer for how far the Fed can go and how much this market can withstand.
Ferro doesn't like to do math in the 6 o'clock hour. Lisa and I are going to do math now. Stay with us on radio, please. From a huge negative 10-year real yield up to where we were today, a new high in the 10-year real yield, 1.69%. We've made it 88% of the way back to where I was before the great financial crisis. We're getting back to what I knew was normal.
And this is key. It's the real yield. It is not just nominal yield. It is being driven by this feeling that the Fed is going to have a higher base rate than it's had and higher relative to inflation at a time when, again, people gaming out. What did we hear yesterday from one bank, from BNP? 5.25% Fed funds rate. I mean, these are the kinds of projections that you're hearing out on Wall Street right now.
One other idea here in Pivot Thursday, maybe Kuroda will pivot, maybe the Bank of Japan, and critically the Ministry of Finance will pivot. I woke up to a 150 yen. That's historic, back a zillion years to 1990.
And people are calling about intervention. You also saw the 10-year Japanese bond trade above the range. By the way, we're opening ourselves up to all sorts of criticism with Pivot. People are going to send us GIFs of people dancing and pivoting, and the Fed's going to pivot. I mean, it's almost been like, it's been dragged under the mud or raked under the coals, whatever kind of acronym that you want, based on the idea that the Fed is not going to retrace, and that's sort of what it's been associated with. And I think that the market's pivoting away from that.
Lisa, for the American audience here, on the chaos in London, all I can say is I woke up to it's more immediate for Prime Minister Truss than it was 24 hours ago.
Yeah, her Tory peers are basically saying, get out. I mean, really, they're really saying, we hope she doesn't last through the night. That was one of the MPs. That was what they said. We hope that she doesn't last through the night.
For those of you framing caution, Max Kettner's going to join us quickly here. We're going to get through the brief. Let me do the data real quickly here. Red on the screen, ever so slight. Futures negative 12. The VIX really goes nowhere for 6 weeks. 31 level on the VIX, and the yield structure simple. 4.58% was 4.60%. 2-year yield, 10-year yield 4.14%. Oil not part of the story today. And dollar really interesting with real Pacific Rim weakness. And I do want to note Chinese stocks really not doing all that well. I don't know about you, but let's pivot to a brief.
Let's pivot to 8:30 a.m. That's the U.S. initial jobless claims. Really curious to see whether they start to tick up. I mean, if you look at the actual line of initial jobless claims since the pandemic, it looks like it's flatlining. It looks like someone died. This is the question. When does it come back up and start to really give a sense that there is this loosening in a labor market that really has been quite tight? Today, the talk show that is Fed Speak includes Philadelphia Fed President Patrick Harker, Fed Governor Philip Jefferson, Fed Governor Lisa Cook, and Fed Governor Michelle Bowman. I know you love this, Tom. Jim Bullard, though, yesterday set a tone that we're going to hear more of. that it is important to front load,
Right.
but it is also important to wait because of the lag effect.
I'm going to listen to Harker. I think he's got a great concept there with his business background of the manufacturing of the Philadelphia region. And with earnings coming out today off of Procter & Gamble yesterday, it's a rich day. I'd also note, I believe, American Airlines out.
Yeah, so let's talk
well.
about some of the earnings. We do get American Airlines. We also get Blackstone, Freeport McMoran. I'm curious about that wholesale space, Snap, and Whirlpool. Just the industrial companies I'm very curious about.
Yeah, the tool business for Snap, it's going to be amazing to see what they do in ranches.
Snap-on? What do you think it is?
Is it Snap or Snap-on that we're going to see?
It's Snap.
Like
it's a social media thing. It isn't
Okay,
necessarily
great.
a tool belt. I'm just curious. Just
providing
letting you know.
clarity, Bramo.
Incredible insight.
Bramo's favorite guest joins us right now. He's hugely popular with the Bloomberg surveillance audience worldwide. HSBC's chief multi-asset strategist, Max Kettner. Max, when does the gloom lift?
Good morning, Tom. I think it's going to take some time still. I just cannot see risk assets. I cannot see equities really forming a bottom before we see the correlation between risk assets and rates turn negative. Why is that? Well, very simple, because that would tell us that the market is switching into proper recession concerns. All that we've talked about, I've listened to you guys just now, all that we're talking about still is inflation. So all what we're still talking about is, well, is there going to be further upside surprises in inflation in the UK, in Canada? Right. We've seen the UK broadly in line yesterday. All that is still enough to inflict broad-based pain across the asset classes. And that is our positioning still, unfortunately.
Julian Emanuel over at Evercore does a daily note now, folks, in earnings season. He talks about forming the dry kindling of what could be a bull market. Max, the market gets out front of the econobabble. Is the market doing that right now?
No, it's not really doing it, unfortunately, because I think what we have is we have an almost abnormal obsession with all things inflation, right? Whether that is, the claims data today, whether that is, tier 2 data like inflation expectations from the University of Michigan survey, for example. The problem that we're facing now, if you want to jump on any kind of relief trade, any kind of Goldilocks trade, the big issue that you've got doing that is that none of those data can get in your way. So none of the CPIs or PCs or PPIs or NFPs or claims or indeed any of the global inflation data can get in your way. So the risk reward on jumping on such sort of a relief rally or year-end relief rally is extremely poor. It's an extremely poor risk reward where the data just can simply get in your way and really smack your trade.
This seems like almost a consensus, the bearishness around Wall Street, at least the expectation for some sort of downturn, where there's a much bigger controversy is around the long end of the Treasury curve, 10-year Treasuries, with some people saying they're headed higher because we are going to lead to a more inflationary environment. And then HSBC, which is saying actually probably not. Are you actually incredibly bullish right now on the longer end of U.S. yield curves?
I'm not quite yet, right? I don't think we're quite at the point yet. So we need to see a couple of things happening. So for example, one of them is if we see certain parts of the yield curve move further towards inversion. We know the 2s10s is inverted, but we also know that the 2s10s part of the curve is usually the one that's pretty much the worst of the common yield curves in its signaling effect in terms of a recession. It is much better if you look at 3-month 10s, or if you look indeed at what Powell was saying a couple of quarters ago, the front and forward spread, those are still not flat. Those are still actually in positive territory. So we need to see them actually first, at least flat, until we can really go and play that sort of end of cycle recession trade. And then on the other hand, the reality is that hard activity data are still pretty strong, right? So we all feel miserable. Everything that we're talking about is pretty much flat out doom and gloom and misery. And that is, consumer confidence. That's based on PMIs and all the surveys and the soft data. But the hard data are still actually holding up pretty well. And that keeps yields still a bit on the upside. So that, again, we need to see that change a bit, that the hard data surprises start to converge towards the soft data surprises. Then it's time to switch into sovereigns.
So Max, given that you have to recommend an allocation, is it just 100% cash?
No, absolutely not. I think in actual fact, we've just moved into maximum overweight commodities this morning, because we are quite concerned about not only the demand side of things, right? So possible, for example, gas to oil switching, particularly in Europe. So not only on the demand side of things, but particularly also on the supply side of things. Really, a few really underappreciated supply concerns that keep us quite bullish, actually, now for the next couple of months on energy at the moment. We do like value over growth in equities. We do like things like insurance, things like food and beverage. So really the defensives, Max, not only just cash.
We got to go, Max, but give me a Brent crude price. I mean, fold your commodity optimism into what Brent crude does. Do we go back over 100?
I think we're going to go back over 100. We've got a 100 sort of average for Q4. So that probably means, it's going to take a bit of time back to the range where we've been up until 2 months ago.
Max Kettner, thank you so much with HSBC. And within the pivots of today, we're going to go to Britain here in a moment on all that's going on with Lizzie Burden, I believe, scheduled to be with us if we can link up with her at, I believe, 10 Downing Street. Just a research report. It's really fluid right now in the earnings season, about 20% coming in. Lisa, Oliver Chen channeling what we talked about yesterday. What was the stock that went down 45% yesterday?
Oh, yeah.
Olaplex. Olaplexer at Weather. He comes out with a deep 35-page research note on Sephora. And everybody watching who has young girls knows what Sephora is. And Chen is robust on Sephora and robust on Ulta, and ought to be based on what I see coming in.
Well, and there was a story in Business Week that I was reading this morning about how the wealthy consumers keep spending at really accelerated
Dana
clips.
Telsey mentioning
And
that.
this is really the divergence between the deciles, as you talk about, where the upper decile keeps spending. And actually, a lot of these companies like LVMH can increase prices at a much more rapid level.
Quarter for LVMH,
exactly.
way above on market.
But so then how does that factor into overall inflation when you have a significant portion of the population flat on its back?
I agree, and maybe you have two markets here where you've got the caution of Max Kettner, but you've also got some optimism, as Julian Emmanuel speaks of. Futures at -14. Coming up from London, Lizzie Burden joins us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Liz Truss's premiership is looking increasingly fragile after a day of drama at Westminster. The British leader fired one minister over a security breach, and two others were heard resigning amid the fallout from a chaotic Commons vote before agreeing to stay in their posts. Many Conservative lawmakers now want Truss to resign immediately. Ukrainians are being warned about rolling blackouts because of damage to the country's power infrastructure from Russian missile attacks, with President Volodymyr Zelensky urging people to use as little electricity as possible. Zelensky has said about 30% of Ukrainian power stations have been destroyed since October 10th. And Italy's Silvio Berlusconi has told lawmakers that President Zelensky forced Russian President Vladimir Putin into an endless war. That's according to an audio obtained by an Italian news wire. That recording reveals the existing pressure on the right-wing coalition that won elections last month to soften Italy's stance toward Russia. And Netflix top executives continue to battle it out over releasing more of its original movies in theaters. The Wall Street Journal reports some argue Netflix is leaving hundreds of millions in box office receipts on the table by showing select movies in a few theaters for a few weeks, while others feel theater showings create buzz for the streaming service. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Bloomberg Surveillance, Lisa Abramowicz and Tom Keene. John Farrell on assignment this morning. Futures at -13, the VIX 31. Yields higher, yen prints 150, weak yen, but all eyes in international relations and in politics turned towards London. David Blanchflower will join us in a moment with his work for the Bank of England and now at Dartmouth. But first, in front of 10 Downing Street, I guess as history is made, our Lizzie Burden. Lizzie, there is so much speculation, and of course the British press is a beast unto its own. Let me go to the discussion of this committee that makes the rules for this beleaguered Conservative Party. Tell us what the 1922 committee is thinking on a Thursday.
Well, the wind seems to have changed in Westminster, Tom, because yesterday it seemed as if the Tory party was going to give Liz Truss a chance to cling on until at least the Halloween budget. But since all of the chaos yesterday over the fracking vote, the resignation of Suella Braverman, the Home Secretary, now there's massive pressure for Truss to resign. So the discussions behind the scenes are who's going to replace Truss. And it seems to be, they're talking about Rishi Sunak, they're talking about Penny Mordaunt. Some are calling for Boris Johnson, saying that he's got the biggest mandate of anyone because he actually faced a general election. I don't know if you can hear the protesters. I don't want to inflate their influence. It's the same guy we heard the other day, but he's calling for Tories out. But that's the fear. You know, if they replace Liz Truss, the fear is there'd be a general election.
Lizzie, 20 seconds here in between protests from the gentleman intruding. What's the likelihood that the Prime Minister will resign today? For the American audience waking up, I mean, is this immediate or is this something where she gets to the weekend?
I can only tell you that the international press is gathering here, discussing, making sure that they're on shift to cover it if the lectern comes out. MPs behind the scenes say there are hours to go. The photographers keep shouting, Range Rover, because you've got ministers coming and going. You see the chief whip, you've seen the chairman of the Conservative Party. It seems that the discussions are ongoing for who's going to succeed Liz Truss. So it could be hours.
Saving petrol in their Range Rovers. Thank you so much, Lizzie Burden in front of 10 Downing Street. We'll continue to follow this story with Bloomberg News' government team in London. Right now, the perfect guest for this moment, for his beleaguered London. Nothing like this ever happened in his Wales. From Cardiff, David Blanchflower joins us. He is Dartmouth Professor of Economics and far more a former Bank of England Monetary Policy Committee member. David, I guess I want to avoid the politics. And just within the chaos of London, what the Commonwealth outcome is for the people of the United Kingdom. Whether Labour, whether Tory, new Tory government, will England be poorer in 12 months?
Well, I think so. I think it's clear that there's a risk premium that's happened since that terrible mini budget that's come. The financial chaos, actually, I think, Tom, is what's driven the politics. So what you saw is a budget that didn't work out what the funding was. They fired the permanent secretary at the Treasury. They said more tax cuts are coming, and the markets didn't like it. So we saw the pension funds collapsing. We saw mortgage markets not being able to price products. So that kind of chaos has caused the politics, and I think, I think it's caused the economics and it's caused people to be poorer. I mean, Ben Broadbent, the governor of the bank, one of the deputy governors, came out today saying, this is not looking good on the downside, and maybe the bank won't be able to raise rates as much as the markets are thinking. But this is sort of apoplectic. I mean, I've never seen anything happen so quickly. Well, and remember, I think it was The Economist said they didn't think that Truss had the shelf life of a lettuce. And it turns out that the lettuce is probably going to win. But the British people actually, in fact, are going to lose.
Well, it depends what kind of lettuce, I suppose, Danny. I am curious.
No, they posted it. You can see it online.
Exactly. They have a Believe Alive cam.
60 one from Tesco's.
What's your question? And what's your sense, though? You had said initially when this all transpired that you thought that the Bank of England should raise rates by 100 basis points in an emergency meeting in order to get some credibility in markets. They didn't, and they won in terms of markets moving toward them. What do they have to do next month when they come back together and try to understand how to approach an economy that's going to weaken one way or another and plans that look much more like austerity than anything else on a fiscal level?
Right. I mean, in a sense, Lisa, it's asking me what's going to happen in the next 24 hours. We don't exactly know. I mean, obviously, the problem is that there are arguments on the one hand to say you need to stabilize the currency, you need to worry about inflation. But actually, the data from yesterday suggests that the UK's hit peak inflation. And then the evidence is actually that the economy is going to slow. I mean, especially, well, we don't know what's coming. We heard that lots of spending cuts were coming, but that was yesterday. So I think the bank's going to be in a position where there's very strong arguments on one hand to raise rates and on the other hand to cut them. I mean, what they've got to do is calm nerves. That's really what they've got to do, Lisa.
Professor Blanchflower, what changes if Labor takes over? What, within the mess of this, what happens if it's Prime Minister Starmer?
Well, I mean, I think you're going to see things at the edges, but I think essentially what if I was advising him, I would say what you're going to have to do is you can't really do anything much to start with. And Rachel Reeves, the Shadow Chancellor, has said this. You've got to get in, try and calm nerves, work out what the right strategy is. They'll probably, I think the thing they would probably do on the first day would be to impose a windfall tax on the oil companies. And the CEO of Shell has even said that's probably a sensible thing to do. They may well go and impose a windfall tax on the banks. But I don't think they're going to move very fast because, the chaos that's going on is really, I've never seen anything quite like it. So the political chaos now is feeding back to the economic chaos, and they're going to have to calm nerves and say, we're not going to do anything stupid. We're going to pull back that mini budget. We're going to talk to our permanent secretary. We're going to talk to the OBR, and we're going to think where we go. But I think they've made that clear that they're going to have to sit and take stock because you want to be in a situation where you're trying to catch a falling knife. And if you ask me these questions in an hour, the answer might be different because
we'll do that. Come back in an hour. David Blanchflower, thank you so much with Dartmouth College. Greatly appreciated. A movable feast. I just looked at a technical study, Lisa Abramowicz, of sterling, and when the moving averages converge to a point like this, whatever your setup is, that's where we are right now. We're at a point here at 111.97, and you just wonder, and do the markets again tell the politicians, whether Tory or Labor, what to do with you pick your level on sterling where it goes weaker, drives weaker.
It gets more complicated from here because on one hand, you do have yields coming down on the long end, which is positive, at least for the Bank of England, but you do see a weakening, a pervasive weakening, and perhaps not to the recent lows, but still, nonetheless, the pound has lost a lot of its international clout. When you do have everyone calling for austerity, you do have this expected lower growth picture no matter what happens. And so what is the market calling for, right? What's the break point going to be? What are they going to really lobby the Tories or anyone else to do?
But it is a political battle, and folks, I wish Ferro, where's Ferro? What's he doing? What's his papers?
You keep telling him, you keep mocking his dislike, his disdain of the Dow. Playing footsie.
I don't know, he's in Glasgow or Edinburgh giving a paper.
He's on a well-deserved day off. Have a great time.
Futures at -10. Sterling.
Keep telling him things.
111.98. Good morning. Good morning, everyone. Bloomberg Surveillance. We're following a number of really key stories in economics, finance, investment, and yes, in politics as well. And no, it's not Washington in the midterm elections. It is a chaos in London. We'll continue with that coverage. I do want to point out the yield shift we see. The yield curve actually pretty static here, but the real yield up to new recent recovery highs, 1.69% on the inflation-adjusted yield. That changed the dialogue for everybody, Lisa, including Blackstone, out with earnings here in a bit.
Yeah, and we're going to be looking at that. Just picking up, though, on earnings. Last night, after the bell, we saw Alcoa earnings. And this is one of the biggest of the metal giants, and they came out really disappointing, and you could see those shares absolutely plummeting. This is a bellwether. How many more bellwethers do we have to have? These are not you're not seeing the same kind of demand for electronic goods that use metals, for cars that use metals from China. How much do we start to see that kind of theme as we get earnings trickling out?
Yeah, what's so interesting here is Alcoa was the first to report. Out of Pittsburgh, they used to take huge pride in reporting early. Now everybody's caught up with Alcoa, where they're in the first wave of earnings that are coming out.
Yeah, but the interesting thing is that it's not a good signal. So how many of these do you need to see? There are those that can pass along.
Well, look at Procter & Gamble's headlines
exactly,
yesterday.
The FX headwinds, and you're seeing that also from IBM, still managing to beat, but for how long? And again, these are kind of the themes that I'm looking at to try to understand exactly where we're going.
Alcoa 10-year total return 6.4% per year. Wow, has the aluminium business been a challenge?
It's been a challenge, and how much has there been a lack of investment at a time when there is a shortage of real-world stuff? There's also a shortage of houses, which is the reason why the prices have been bid up, and we keep getting housing data that shows plummeting sentiment, yet prices hanging in there. At what point do we move on? Sandra Philippin has been covering this all over at ABN AMRO, and the meaning behind some sort of significant correction in the housing market. She's chief economist there. Sandra, how concerned are you as we start to see yields rise and we start to see some of the valuations of housing across the world plummet? How concerned are you about this being a node of instability going forward?
I'm very concerned, but also I'm not that certain yet of this being the start of a major house price correction. So I think what you should realize what we're seeing here is a kind of a steep correction after a very steep rise of house prices. And that could also be kind of the air out of the market, where basically, I mean, depending on which region you're looking at, because this is all very institutionally determined. But in a lot of housing markets, what you're basically seeing is that there's a huge shortage. Price rises have been massive. That has been basically eroding affordability already before the war. Then the interest rate rises translated into mortgage rate rises, and that could be, let's say, a trigger event. However, the shortages are still there. So if there's a fast price correction of some percentages, that could also mean that affordability comes back, and that would mean that transactions would come back, and that would be a support for the housing market.
Right. The reason
that said,
yeah, but and then this but there could be a big concern, right? There could be something significant that happens, and this is sort of the imbalance that people are looking at on a broader sense, looking out when you see yields rise to this degree. Do you feel that it is sustainable on a global basis, or do you feel like we're seeing the beginnings of certain triggers that really cause some sort of violent end?
Yes, well, there are numerous risks currently out there that could lead to a violent end. So if you saw the mortgage demand in the US declined with 86%, that is quite shocking. So actually, so I just mentioned our base case, which is still for kind of a moderate correction, but you could indeed imagine something much more severe. And the way to think of that is if you just take the mortgage rate rises in most countries between kind of new mortgages now and let's say 6 months ago is about a 4% difference. If you would assume that people cannot afford higher monthly payments, especially not in these inflationary times, that would mean that their lending capacity is decreasing 20 to even 35%. And if that were the house price correction, then we would be looking at a disaster.
Sandra, you've got a beautiful distinction between the rates of change of the game in Europe and across the Atlantic to America. You talk about an America landing softly and a real rapid deterioration within Europe. How does Lagarde and ECB adjust to that reality?
Well, I mean, Lagarde and the ECB are mainly focused, of course, on what's happening in Europe, and the nature of the problem are really quite more severe in Europe. But it's still, I think that Lagarde is mainly worried about inflation expectations at this point in time. And of course, how all these shortages, even though gas prices are declining significantly, the real worry is now really kind of people are getting more and more aware that the real worry is not only about this winter shortages, but also next winter shortages. and long-run adaptation potential.
Sandra, unfair to you, but I'm going to rip up the script right now. We've got to do that. Sandra Philippin of ABN AMRO here. The Telegraph reporting on a speech that Sir Keir Starmer is giving in Brighton, where he says we need a general election now. Sandra, how would a general election now in the United Kingdom change the financial markets in the city?
Well, I think that could be, in the first moments, give more uncertainty, but in the middle to long run, it would definitely provide more certainty, because I do think that the situation now is basically not reassuring at all. I mean, of course, now it's not reassuring at all, but the problem, I think, that markets are really digesting this still, is that what we've seen in the last few weeks with Truss is basically a situation where where politics and financial markets and the Bank of England are really not moving in the same direction, also eroding each other's credibility, and this confidence crisis is basically not solvable. And I think markets are starting to price in the idea that whatever U-turn is going to happen, nobody is guaranteed that there will be a new turn around the corner a week from now.
Sandra, thank you so much. Sandra Philippin with us with ABN AMRO, and we do see a weakening of sterling. I would suggest off this idea of a general election, Lisa. Where's Ferro? I mean, you and I don't know what we're talking about. Let's just be, it's like, what? And that's where we are. But the answer is the Telegraph reporting that this is Starmer in a public speech saying, let's go, let's get a general election out there. I agree with Ms. Philippin that would clear uncertainty.
Well, certainly there needs to be some sort of changing of a guard, and that's what we hear. And it's not good for any party or any political regime to have so much dissent publicly with people calling for someone to step down. Looking at this backdrop, though, there is a larger takeaway over the past few weeks, which is that governments are constrained by what the market lets them do.
And the electorate as well.
And the electorate. Yeah. And this is a new paradigm. This idea that markets are in charge, the popular support is in charge, and they cannot make violent moves away from what they will be allowed in markets. And this is a new regime that's really foisted upon them by the fact that money costs something. And that has been the lesson from the United Kingdom, and they are not alone in that. That's very much a lesson for Europe, and it's very much a lesson for the U.S.
Let us stop here, moving into the end of October. And Max Kettner, HSBC, was talking about his year-ahead piece, which people are starting to talk about. And you nail it, Lisa, where you say what's different now is money costs something. And that's a massive generational change for X% of the people watching surveillance.
We heard that from Senator Warren on earlier this week with David Weston, and he was saying it's really important to reduce the deficit. It's important to be cognizant of how much we're spending. It's a renewed fiscal discipline that, again, has been caused by where the market is, the fact that you cannot spend. People are talking about reducing the deficits. So at what point does that really push policy in another direction and hold them accountable? I would argue that the UK is a prime example of that.
Yeah, I'm watching sterling here, folks, really off the Bloomberg. We do this on a wonderful intraday as we saw yen go through 150 earlier this morning. For those keeping score at home, through 111.70. When you go out 4 digits on a currency, that's a pip. So you say that's a Gladys Knight in the pips, which you probably don't get.
I get that. I do get that. Yeah. And I would also argue that you rounded up yesterday, so I don't even know you anymore.
But it's how they quote 4 decimal points in Atlanta down in Georgia. But the answer is sterling here through 111.70 is a weaker sterling this morning.
Meanwhile, we're getting earnings continue to roll out in the U.S., AT&T the latest. And what I find interesting is people are turning to utilities as a real bastion of safety at a time when people still pay their wireless bills. And AT&T did beat expectations on that exact fact. People are going to pay their wireless bills arguably before they pay their rent. I mean, people want their phones, and that's something that we live with every single day.
Let's talk about this in terms of pricing power, as we heard from Procter & Gamble yesterday. I know all of you are living it on radio and TV. 10-year total return, what's left of the telephone of my ute, flat per year for 10 years.
Fair,
That's not acceptable.
Okay, but that right now you're getting a little bit of a pop, and at least they're maintaining what they've had. The point is they're not necessarily losing to the same degree as some of the other companies.
They're losing less money than they used to.
Exactly, and they're losing less on a relative basis. And the fact that people are talking about them as a bastion. And you know what else people are talking about?
Am I supposed to buy an equity with a gross yield of 7.1%?
I think there are a lot of people who are saying it's pretty attractive when you have, the risk in other stocks. Other people are saying it's important to look at multinationals outside of the U.S. that can have the reverse effect of the dollar headwind,
If
and that's
the dollar
something else.
finally
Yeah,
gives
exactly.
way.
Well, that's something people are kind of thinking
An
about.
eventful day of earnings. Julian Emanuel mentioning 20% of market cap is already reported, and we'll give you coverage of this on surveillance through the coming weeks, including that tech overload. Is it next week we get massive
Thursday.
tech overload? We'll have to see on that. Red and green on the screen. We're watching London. Lizzie Burden is at 10 Downing Street, and sterling on 111.97. Stay with us.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Officials in China are said to be debating whether to reduce the amount of time people entering the country must spend in quarantine. They're considering setting the period to 2 days in a hotel and then 5 days at home versus the current 7 days in a hotel and 3 at home. The country's COVID-0 policy is leaving it increasingly isolated from the rest of the world. Hong Kong is reportedly looking to allow VIP bankers who test positive for COVID-19 during a gathering next month leave the city via private jet. About 200 people from global firms, including banks, securities companies, and asset managers, are set to attend the 2-day HKMA summit. Infected guests without their own planes may be allowed to isolate in their hotel rooms. Australian employment unexpectedly stalled in September, while the jobless rate held steady, a result that reinforces the Reserve Bank's decision to slow the pace of policy tightening. Employment advanced by just 900 people from August, well shy of the 25,000 gain forecast by economists. Unemployment held at 3.5%. Hermes sales have surged as luxury shoppers in China return to stores after pandemic restrictions eased, snapping up Birkin and Kelly handbags. Third quarter revenue rose 24%, excluding currency swings, topping analyst estimates. The results are more evidence that producers of luxury goods remain largely immune to the wider squeeze of spending. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
My message to the American energy companies is this: you should not be using your profits to buy back stock or for dividends. Not now, not while a war is raging. You should be using these record-breaking profits to increase production and refining.
The president speaking there on hydrocarbons yesterday, of course, X number of days before a always critical midterm election. Couple market notes as we do housekeeping to keep you advised through the morning. Yen 150 print 2 hours ago, 149.78 is a weaker yen. That's demonstrable. Oil, not a story. We'll get to that in a moment. Well, a little if no oil. I stand corrected. Up $1. Futures red and green don't give us any love at all. And Chris from Tahiti emails, and thank you for watching in Micronesia. Gilts, British gilts extend their gain. This is price up, yield down. And Lisa from a 5%-ish level down to 3.87% on the 30-year British gilt.
I'm sorry, I'm busy watching the live stream of a head of lettuce and seeing whether it
Explain
outlasts
this to our
Liz
American
Truss.
audience, because folks, this
Basically,
is Greek to me too.
Tabloids in the UK have a live stream of a head of lettuce from Tesco, and they want to see if that will outlast Liz Truss's prime ministership. And there's even an entire betting system around this, with people betting on the lettuce.
Well, it's a movable story. Let us go to some of the breaking news there. Lizzie Burden outside 10 Downing Street as well. Lisa, why don't you bring in Kevin Book? But Lisa, you and I saw something yesterday both of us have never seen, which is a White House is Wall Street oil strategist.
Okay, one of the most stunning things that I saw yesterday was the White House putting a floor under crude prices at $67 to $71, $72 a barrel as an attempt to shore up confidence by oil companies so that they would invest. What does this say to the rest of the market in terms of how closely they will be intervening at a time where it's unclear what they can do on the key products of refined goods? Kevin Book is joining us, head of research at Clearview Energy Partners. What did you make yesterday, Kevin, of all of the rhetoric out of the White House?
Good morning, Lisa and Tom. Look, let me back up just a little bit and ask a question about where we are in market democracy. Markets essentially allocate by pricing scarcity. Democracies allocate power through popularity, and scarcity isn't popular. So something's got to give. You can ask, are we looking at markets as they were? And the answer, I think you referred to this just a few minutes ago, is no, absolutely not. Governments are stepping in. We call it an age of intervention. But on the supply side, there's not a lot that governments, especially the government of the United States, can do because it doesn't have an oil company. So it's trying to send a signal to the companies that are out there that there is some demand that the government is willing to provide, and therefore a floor on prices. Not obviously going to convince when the price is, skewed $20 to the upside with that floor, but it could have some potential to persuade if that free hedge stays on the books long enough for companies to use it.
Kevin, none of this really makes sense unless you view it through a political lens, because gasoline prices have come down dramatically and the real problem remains in diesel. And you're seeing those prices remain high and stockpiles fall to the lowest levels in decades. And there is very real concern that we will not have enough heading into the winter. What's your view on why now and what could actually be done and how perilous the situation in the diesel stockpiles really is?
Well, perilous because in February, the European Union is supposed to block Russian imports of Russian products, which means that if those products don't find other markets, more diesel scarcity coming when we're already short. One thing we didn't see yesterday, Lisa, was a product export limit. It's been talked about since March, June a lot, September continuously. Nothing yesterday, but I don't know that we're done, Tom.
Well, this is important. Lisa grilled Brian Deese yesterday on this, on the export question. Explain to our audience the ambiguities of a U.S. exporting hydrocarbons versus a U.S. saying, no, we're done with that.
Yeah, we've been essentially exporting products on a net basis for more than a decade and really going gangbusters with diesel. Price signals out there in the world calling for our inventories as an essential moderating part of balancing the market. And so inventories are extremely low in the Northeast, 60%, more than 60% below the 5-year average for distillate fuel. That's a real concern for policymakers going into the risks of shortage.
I look, Kevin, at the price of oil, and one thing we can say, and I'm beginning to see little tea leaves of China capitulating on quarantine of travel. In your Clearview model, is there the idea demand comes back in Asia, and what does that do to Brent at 93?
Well, if we've been looking at the Chinese effect on demand depressing crude prices relative to where they might go, again, let's just back up. Russian fossil fuel exports 5.5% of global consumption for decades. We're now missing 1.3 percentage points with more to fall away. If you come on the demand side strong from China, then you're going to tighten markets a lot. Now, you might argue inventories are still below the 5-year average for global petroleum OECD stocks. That means that there's still room. But of course, OPEC just cut.
Well, Kevin,
go ahead.
Just real quick. No, I want to link this into what we're seeing over in Europe, because you were talking about the potential export control. Where could we see the price of diesel? How much could we see it increase? How could we see the price of natural gas increase if there is some sort of export ban, or even not, but just based on where inventories are right now?
Well, we don't think that we're likely to see a natural gas export limit. Lisa, here in the United States, the White House, I think, has been pretty clear about trying to support allies by providing supply. But in terms of permitting new plants, in terms of getting through the regulatory process, high prices here at home may be already starting to put the brakes on that. In terms of diesel exports, about 10% of distillate in the U.S. is exported to Europe. So significant but not dominant from our export portfolio. We export zero gasoline, right? The gasoline price is really the political meter that so many people watch, but more than half of our gasoline goes to Mexico. So if there's export limits on hydrocarbons writ large, particularly on liquid fuels, then there's other parts of the world that could be short a lot sooner.
Kevin, terrific brief. Thank you so much. Kevin Book, Clearview Energy here. And with oil up a stick, $86.98, make it $87. American oil, $94 at Brent crude. And I mean, it's not that far from 100. We have, as we mentioned, many pivots today, and one of them is the continuing news flow out of the United Kingdom. Graham Brady is with this, for me, not strange, that's the wrong word, but foreign 1922 committee. He runs it. These are the committee that makes the rules, Lisa, if a prime minister comes or goes, how many votes are needed, how do you get to one candidate, two candidates, five candidates, etc. And he's walked through the door of 10 Downing Street.
The clock is ticking, and I will just say that you're seeing the metaphor of that head of lettuce on Twitter pretty much lighting up the screen as people say it looks like it's going to win. How much are we looking at the last hours, as Lizzie Burden said, of Liz Truss's prime ministership? But what comes next, right? Because it's coming at a time when the economy is facing a really difficult moment where right now the Tories are flat on their backs, but there isn't a clear leader. Do we actually see Boris Johnson come back?
I don't hear that much. It's it's not our territory, but I will make clear, folks, the idea of Prime Minister Johnson returning is not in the zeitgeist this morning. It's about the former Chancellor, Mr. Sunak. I even don't hear Michael Gove much talked about as well. But again, it's a movable feast. I would say at 7 o'clock here, Wall Street time, the dialogue has changed for Lizzie Burden just in the last 60 minutes as well at 10 Downing Street. We're following that story. We're following higher yields. Futures go green now. Futures up 11. It's too much optimism. We've got to speak with Chris Harvey.
I think the Fed's going to be able to get inflationary pressures to subside, but at what cost?
They're not at levels where one can say we can declare victory now.
Over the next 3 to 6 months, we still have a lot of monetary policy tightening ahead of us.
It may be some time before we get back to low rates.
I don't see 2% rates coming back anytime soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television. Mr. Ferro on assignment. Futures up 7. Dow futures up 115. It doesn't matter. There's extraordinary movement of a number of different stories. And I guess, Lisa, we're not doing politics 101, but there we are. It is a movable story at 10 Downing Street.
It seems like the clock is ticking down on Liz Truss's prime ministership, and she's just getting to the end. She acknowledges Wednesday was a difficult day, file under, no kidding. And she is definitely under incredible pressure.
Moves.
She is going to evidently be meeting with Graham Brady. She has been asked to meet with him. He is the member of parliament for Sale West. All of these questions right now around what happens with Britain at a time when it's facing incredible inflation, high rates, and an economy headed downward.
The market's so important now. We're going to do that first and then go to Lizzie Burden at 10 Downing Street. We'll keep up to date on that story. Sterling was a 111 handle. We're now out to a 112.21. Buoyant, I would suggest 112.50 is a different story, to say the least. Completely idiosyncratic. Turkish lira just gives way as they cut their interest rate that's been widely anticipated. Erdogan doing Erdogan 101 economics, 8.60, a new level for Turkish weakness. You like how he slipped that in there?
Yeah, that was good. I like that. Actually, it is. It's sort of the unconventional monetary policy getting absolutely hammered in the currency market, which is the relief valve that we've seen certainly when it comes to Japan as well. And the yen there weakening. Continuing, though, to watch the front end of the U.S. yield curve, which arguably is pressuring
everything. Can we frame
everything.
a 5% 2-year?
I think that we can. I mean, people are framing out a 5% Fed funds rate by March of next year. I mean, is that going to stick for 2 years? I don't know. But people are talking now about a new regime that's been moved up. And how much is that exacerbating the political woes that we're seeing right now around the world, in particular with the UK?
Brent crude, $94 a barrel. Let me go. I'm going to focus on foreign exchange, this data check. We welcome all of you from Global at Wall Street. We don't have a 113 DXY, but we're getting there quickly. Yen, a 150 print 2 hours ago, 149.78 everywhere. everyone there watching the Ministry of Finance. Euro doesn't give me much information, 0.98. When's the ECB meeting? Is October 27th.
Something like that.
I think something like that. Swiss franc is weaker. That's important. We haven't talked about Euro Swissy, and that's some relief there for the Swiss government and the SNB. Sterling 112.09 is moving around. Can't keep score of that as well. Futures up 11. Lisa?
So let's just talk about what we're looking at today quickly. 8:30 a.m. we get a U.S. initial jobless claims. Do we see that tick up that so many Fed members are looking for in this perverse reality where a softening economy is actually exactly what they're looking for? We get a host of Fed speak. Philadelphia Fed President Patrick Harker. Tom will be watching that closely. Fed Governor Philip Jefferson, Fed Governor Lisa Cook, Fed Governor Michelle Bowman, among the many voices. And then earnings do continue. We did just get Blackstone, which was a beat. We'll go into that later. Freeport-McMoRan coming out as well. American Airlines, Snap, and Whirlpool all after the bell. Snap and Whirlpool in particular. How much do we get a feeling as 20% of the S&P has reported that we are in a good phase? Because right now, if you take a look at Alcoa, those shares down almost 11% on the heels of a disappointment, a bellwether potentially of the metal industry.
Am I right that it's each company is a different story? I don't see a holistic thing here right now.
The pressures are holistic. FX pressures first and foremost among them, but how they cope with them and their pricing power is different depending on who their customer is and depending on how essential their goods are to what people do in their lives.
Let's do what you need, which is recalibration of the equity markets here at 37.19 on the Standard & Poor's 500. Christopher Harvey joins us, head of equity strategy at Wells Fargo. Chris, let's get to your breaking news from Wells Fargo, and that's simply you go a little bit tepid on the banks. What did Mr. Diamond get wrong?
He didn't get anything wrong. We've been thinking about downgrading the banks from overweight for some time. It just doesn't fit with our secular themes. We really want to reduce our exposure to cyclicality. We really want to barbell more defensive assets with GARPy type assets, and banks just didn't fit in there. It's more of a macro issue than anything else. And if you look at how banks report and look at the numbers, they popped, they're performing in line with the market, and we thought this was a good time just to step off this trade. Nothing that we really don't like about the banks, but we do think it's just more of a market perform. As we think about things too, sentiment or the macro sentiment's going to be an overhang, and we just don't want to fight that. We think there are better opportunities out there for us.
Chris, does this earnings season matter? Is it giving us any forward look at what's going to happen, or is this basically going to create a revaluation that can make you double down more effectively on your theses?
When you say does it matter, it absolutely matters. What are we looking for? We're looking for forward guidance. We're looking for how the consumer is holding up. We're looking for margins. And for the most part, what we're seeing is the consumer's okay, right? There's a lot of fear about the consumer, what we think the consumer is doing and what's happening with the consumer. They're being pulled further and further out on the ledge, but they're not there just yet. Margins have come under pressure. They continue to come under pressure, but they haven't cracked the way a lot of people have thought. And the issue with forward guidance at this juncture is you're not going to get a ton of really far-looking forward guidance. I think that comes at the beginning of next year. So when a lot of people talk about numbers coming down, I think they're a little bit too early. You're not going to see those numbers come down if and when we go into recession, because that's a 2023 thing. You're not going to go out on a limb and start talking about very aggressively about 2023 right here, right now. And what we're hearing from companies is things are okay. As Tom pointed out, you're not being saved by the broader market, but if you have good underlying fundamentals, if you have good trends, you are being rewarded, and that's important.
Chris, we've been talking all morning about the yield lift that we've seen in the front end of the curve, how we're gaming out what a 5% two-year yield could potentially even look like. How closely are you as an equity investor watching the front end for some sort of sense of how much you need to bring down your valuations when CPIs around the world keep performing to the upside, continue to surprise to the upside?
Right. So Lisa, when we look at the yield curve, we'll look at the front end for indications of where the Fed's going to go. Right, the front end has been a good indication of whether the Fed's going to get more hawkish. You see the front end pop up, Fed's going to be more hawkish. When we look at the middle part of the curve, the 10-year, that's really more about valuation. So if you continue to see the front end rise, that just means the Fed's not ready to stop, or the Fed won't stop because they're following what the front end is doing. But the valuation is really more about the 10-year at this point in time. And the 10-year is really caught up with what's happening over in Europe. and the gravity European rates have on the 10-year.
Chris, I want to talk about a factor nobody ever talks about, and I give a nod to the Meghdon Desai, who owns this at the London School of Economics, and that is a factor called profitability. Out 18 months, out 12 months, will there be a partition between evidently profitable companies and those non-profitable?
So, Tom, when we think about profitability, when we think about quality, we think about balance sheets, we think about ROE, ROIC, we think about profitability, and we think about net profit margins. And so it's very important for our quality factors and the way we characterize quality stocks. And so is it going to be important? Absolutely, it's going to be important. We think we're going into a higher quality environment. And so those companies that are higher profit or more profitable should be better, more rewarded by the marketplace. And we've seen that year to date. There's also a bit of a duration component to some of these things, but absolutely we look at profitability and we do think it's going to be very influential on stock pricing. It's something that we're placing a lot of focus on.
Your SPX target here out 12 months. You've done a year-end target, 12/31/2023. Help me.
We haven't. What we're saying about 2023 is we think the first half is going to be really sloppy. That's when we think numbers come down. That's when we think we're going to be dealing with a recession. And what we want clients to do is on these rallies, we want them to reposition. We want them to get longer, quote unquote, momentum, because that actually is a more defensive strategy. We want them to barbell momentum or low vol with some of the GARP type names. We've seen some good reports from some of these GARP names or some re-rated stocks, but we haven't put a 12/23 number out just yet.
Chris Harvey, thank you so much with Wells Fargo Securities. Any number of stories we're watching again in London. The travails of Prime Minister Truss. Peston over at ITV says Truss called for the meeting. I don't know what that means. But what we're really looking at is the follow-on to our conversation yesterday with Scott Kirby of United Airlines. And, you look at American Airlines, and I really don't know the nuances. I mean, I don't know who's serving the best beverage of my choice. But what I see here is American Airlines telling me they're really back to 2019 business.
Again, this is yet another major U.S. airline coming out and beating expectations, the shares popping after they came out. But really, this highlights how much people are willing to pay for tickets. People are wanting to travel regardless of how much you've seen the inflation really increase the cost of that. Also notable that American Airlines is on track to reduce debt levels by $15 billion by 2025. And this really feeds into a theme of a Bank of America fund manager survey where the highest proportion of investors surveyed said they would like companies to use their cash to reduce debt than invest in CapEx or buy back their shares. The fiscal discipline is something that we're seeing not only for governments, but also for corporations.
And now, folks, we go to what matters. Angeline Rascoe reporting off our London desk in Paris on a small stock called Hermes. And they have, Lisa, the Birkin 25 bag in Togo leather costing $7,242. In Hermes reporting, you can nudge that puppy up over $8,000 here with price increases.
My favorite thing is that you look at me with a handbag, but it's you who's more interested in a Hermes handbag than me. And I will just say this, that with respect to all of these pricing, it goes back to luxury goods.
You mentioned LVMH.
Being able to continue to up their prices and sell just as much because you are seeing a real divergence, an even bigger divergence between the upper and the lower income households. You could see that with Hermes.
Hermes opening on Madison Avenue in New York, and they announced today they will open a new store in Shanghai.
Interesting.
As they look forward to Asia opening up. So there's just too much optimism. Come back. This is Bloomberg.
$8,000 for a handbag. What are we coming to? Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukrainians are being warned of rolling blackouts because of damage to the country's power infrastructure from Russian missile attacks, with President Volodymyr Zelensky urging people to use as little electricity as possible. Zelensky has said about 30% of Ukrainian power stations have been destroyed since October 10th. And Italy's Silvio Berlusconi has told lawmakers that President Zelensky forced Russian President Vladimir Putin into an endless war. That's according to audio obtained by an Italian newswire. That recording reveals the existing pressure on the right-wing coalition that won elections last month to soften Italy's stance toward Russia. Liz Truss's premiership is looking increasingly fragile after a day of drama at Westminster. The British leader fired one minister over a security breach, and two others were heard resigning amid the fallout from a chaotic Commons vote before agreeing to stay in their posts. Many Conservative lawmakers now want Truss to resign immediately. Australian employment unexpectedly stalled in September, while the jobless rate held steady, a result that reinforces the Reserve Bank's decision to slow pace of policy tightening. Employment advanced by just 900 people from August, well shy of the 25,000 gain forecast by economists. Unemployment held at 3.5%. Cargo volumes at the Port of Los Angeles fell for a second month in September. The number of containers handled in a historically peak season were down 22% from a year ago, the lowest amount for September in 7 years. The head of the nation's busiest container port says the outlook remains soft for the rest of 2022. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
We did not have a full briefing of the package the night before. To be fair, we had some briefing from them ex ante on the fiscal event, on the things they thought it would be in, but we did not get the normal briefing that we would get for a budget.
Quoting the Latin, the Bank of England Deputy Governor, John Cunliffe's a really interesting guy teaching at the University of Western Ontario years ago, a hugely prestigious school in the Western Hemisphere, and of course doing duties for a Bank of England. We've got all sorts of different news flow this morning. Futures now go green, up 16, Dow futures up 184. The VIX has been static for 6 weeks, 30.79. It ought to be 29 or 28. It's not. We'll get to the yield story here in a moment. For those of you waking up in America, it is different in the United Kingdom than it was yesterday, and certainly within the chaos of 10 days ago. Our Guy Johnson is a student of this and joins us from London this morning. Guy, in your briefing to me this morning, you made clear something has changed in the economics and the politics of the chaos. What is it?
So I think what's happening here, Tom, and we'll wait to see exactly what is happening with Liz Truss. Looks like we might be entering the end game there. But what you're getting here is a divorce between the party pantomime that is taking place in Westminster right now and what is happening with the politics of whether or not Liz Truss survives and who will replace her and who will be the Chancellor, and what is happening in the City of London. The two feel like they're on very different pages now, Tom. You've got relative stability in the markets today, little pop in the pound over the last half hour or so, but I don't think it is substantial enough to really merit a raising of an eyebrow. So you've now got basically stability, macro stability, which allows maybe the end game of the politics to unfold. And what we saw last night, the chaos in Parliament, I think is now having the aftershock of that is now being felt. So Graham Brady is now inside 10 Downing Street. He is the guy that basically determines the kind of the rule book as to how leadership challenges are mounted or not mounted. And I think we're watching potentially the end game unfold here, Lisa.
How messy could this be? And what does that mean for markets? Because right now there's relative calm. Yields are lower across the board. You're seeing a little bit of stability in the pound. Yet if we start to get a general election or if we start to get some sort of sense of Boris Johnson coming back, what does that do to that stability?
I think it's very hard to tell. I think the best case scenario here is that you either get Rishi Sunak taking over as Prime Minister or you get Hunt taking over as Prime Minister. If Rishi takes over, Hunt remains as Chancellor. That is the kind of stability, certainly, I think the Conservative Party is craving after we saw what happened last night. Are they prepared to go back to Boris Johnson? Clearly, there are those within the party. I note the Doris tweet this morning who would like to see that happen. But I think it may be the moment for the grey men. We saw that a few days ago being talked about, and I think you're slowly seeing that becoming a reality here. They want stability. They crave stability. I'm not sure Boris Johnson would bring that back right now.
Okay.
We're still potentially 2.5 years away from a general election, Lisa.
How much does this actually change the whole landscape? If you're looking for a technocrat after a very emotionally driven debate over Brexit, after an emotionally driven debate around helping households, what does it look like in terms of the depth of a potential downturn in the face of energy prices, in the face of double-digit inflation, in the face of rates that are going to be higher and a pound that's going to be lower?
You're going to have a recession in this country. It is going to be probably a fairly deep one. It's going to be unpleasant. In some ways, maybe it is required as well that the UK now goes through this. I was joking with Marcus Ashworth upstairs a few minutes ago. We were talking about the moron tax that effectively the UK now is having to pay. You need to get through that. You need to calm the situation down. As you say, maybe a technocratic government is ultimately the way to achieve that. It's interesting that comparisons are being made with Italy right now.
Well, comparisons are made with Italy, and Maria Taddeo sent me a note this morning on the interesting Italian politics, again, of Berlusconi being visible and coming back. What is Boris Johnson doing right now? I mean, Guy, my knowledge on this is The Crown and Anthony Eden, and I'm not that very good at it. What is Johnson part of the dialogue of Tories in the 1922 committee?
I think, Tom, as I say, there are some that would maybe like to see him back. There would maybe some that would like to see his sort of cakeism return, that sort of boosterism, that positivity. But in some ways, it comes with instability. And that's the challenge at the moment. The Tory party has experienced much volatility, continues to experience much volatility. I suspect that they would want that volatility to stop. Right. I'm not sure that they would get that with Boris Johnson. I don't know where Boris Johnson is. I've seen tweets of him on a Caribbean beach. I can no longer guarantee that that's where he is.
Eating lettuce.
I don't know, Tom. I don't know where he is. I'm sure he's watching with great interest. Guy, but he has a bank balance to fill.
Guy, help our American audience here at 7:23 a.m. New York time. What happens today? What's your best guess?
To be honest, Tom, I think it is very unclear. I think the fact that Sir Graham Brady is inside 10 Downing Street speaks volumes. I don't think it was the resignation of Braverman last night that has been the catalyst for this. I think it was the chaotic scenes in the House of Commons. Liz Truss clearly has no authority. You need somebody to run this government. In theory, it should not be the Chancellor of the Exchequer, but at the moment it looks like it is. So she completely lacks authority. You've had ministers quitting last night. I think more importantly, you had the Chief Whip and the Deputy Chief Whip appear to resign and then unresign. It was just chaos, Tom. And enough is enough, I think, for many people within the Conservative Party this morning. They want change now. They'd hope that they could get to the end of the month. Doesn't look like that maybe is going to happen.
Just a terrific and knowledgeable brief. Guy Johnson there from our studios at Queen Victoria Street this morning. We're going to try to get back to economics, finance, and investment. With Bramo, we can do this on yield. Am I right, Lisa, that over the last couple of days we've seen a shift in yields up? Not so much dynamics in yields.
Exactly. And across the entire curve. So not only are you seeing it on the 2-year, but also the 10-year yield. Basically, people are seeing the likelihood of inflation remaining high for a longer period of time. I keep going back to this. Right now, markets are pricing in a 5% Fed funds rate for the first half.
You can say that, 5.00?
Yes, for the first half of next year. We are now pricing that in as a base case. How much has that really been adapted into the broader market, especially considering that after that, there still are cuts priced in, that the Fed's going to have to back away, even though they're saying we're going to hold it there for a while.
On the Bloomberg 7.20%, 30-year bank rate mortgage. Please stay with us. This is Bloomberg. Thursday, Bloomberg surveillance in 1 hour claims, which seems so secondary to all that's going on today. Red and green on the screen, futures up 9, and futures have been all over the place. I'm not going to give you a vector on the equity market this morning. Yields more exciting early on. They've come back a little bit. 2-year yield, I'm still not used to this, 4.57%. Oil gives me a $1 lift, $94 on Brent crude. Pay attention to that, particularly with what we hear from the White House. And in the currency space, a churn now after the drama of week yen this morning, 150. In the equity markets, it's about earnings. Lisa, what do we have?
Well, yeah, about 20% of the S&P has reported. And what's catching my eye, first of all, Alcoa, and I mentioned this earlier, but this is the aluminum producer that signaled an actual loss in this quarter. They actually posted a loss, and they highlighted that higher costs are facing, are really crimping their margins and falling prices. This is the problem with a time of inflation, but also quickly deteriorating demand. And you're seeing that in China. You're seeing that around the world for particular, computer devices. So at what point does this act as a bellwether at a time where we see strength in other areas?
American Airlines, completely different story.
Well, this is the travel story, right? People aren't buying goods as much. They're still traveling. Those shares up ahead of the market, nearly 3% after reporting better than expected earnings, increasing their full year forecast. They can charge more, and people keep coming. We saw this from United. We saw this from Delta. So even as Alcoa is flat on its back with an 11% decline, you still see that gain in American Airlines. And Tesla shares are lower by more than 5%. After shipments were lower than expected. Well, Elon Musk talking about a recession or some sort of downturn, economic downturn in China, talked about a lack of demand there. He talked about different supply chain kinks that were difficult for him.
Yeah.
He also talked about Twitter and how he knew he was overpaying for it, but he was going to do stock buybacks. He was all over the place. But right now, the takeaway is they missed and they're being punished.
A mixed sell side. I read Ite McCauley's note at Citigroup very, very carefully on Tesla, talking about a little bit of margin erosion there. But I honestly don't know what to make of it, other than when I watch the baseball playoffs, everybody's selling EVs.
Yeah.
I mean, that's what they're doing.
Well, but the competition, that's exactly the point. And so some of the subsidies are affecting their competition, supporting them.
Yeah.
But honestly, all of these earnings, you really nailed it, Tom. They are not the same story. So what is the cohesive narrative emerging at a time of incredible flux?
We'll turn to Wall Street for that analysis, and of course, Bloomberg Intelligence and Gina Martin Adams and her team through the coming weeks. Again, red and green on the screen. And right now, we're going to digress here. We're still watching the United Kingdom. Guy Johnson and Lizzie Burden helping us out this morning. But for global Wall Street, it's about good, ample liquidity. Deborah Cunningham has been with us often. She's Global Liquidity's market Chief Investment Officer at Federated Hermes. We're thrilled that she could join this morning. Deborah, instead of me asking some question I sort of kind of know about, when you go into a meeting at 10:30 this morning, what is your first statement to your team on the liquidity of the market?
Well, the liquidity of the market remains good. It's one of those things that it's not being tried or tested right now. There is a lot of cash on the front end, despite the fact that U.S. savings are down, from their high points. They're up a little bit month over month, and people continue to have a pretty high cash coffer. In addition to retail, you've also got industrial firms with a lot of cash in the front end of the market. And then from an investment perspective, certainly a lot of people have moved out of the long end of the bond market. A lot of people have moved out of the equity market, and they moved into liquidity products. So because there is a lot of cash in this market, Tom, you've got ample liquidity. There's no real issue there.
Deborah, where is it coming from? The flows into the United States, are they all domestic? How much is coming from overseas, taking advantage of both the dollar and rates?
Well, we are being impacted to some degree from some of the slower markets in, the global economy. But a lot of our strength, if you will, and the liquidity in the marketplace is coming right here. It's homegrown. I heard you talking about the UK issues and some of the things that are happening in Europe from a heating perspective. And although those are huge issues and problems causing a lot of volatility in the global markets, in the US, it hasn't come through as much. Earnings Despite the fact that Alcoa is down, you've got a lot of other companies, 2/3 of the earnings that have come in for the third quarter have come in beating estimates, not beating by very much, but beating estimates. So there's cash on a homegrown basis to be used and to keep the market very highly liquid at this point. We still ask every day, when is it time to extend? The yield curve is higher, it's steeper, and it's expected to remain that way for longer. But we still have to ask every single day, when is the time to extend? When is that, trend that we've been in going to stop?
Do you see any sign of it anytime soon?
Not really, not really. I mean, it's obviously being driven by inflation, and with very sticky types of inflation, like wage inflation, like goods inflation, like supply chain disruption and parts inflation, we don't see that changing in a very short fashion. The Fed is, on a path that's going to continue into 2023, and then probably doesn't start the downward turn until 2024.
Should our listeners and viewers, Deborah, consider the path of the 2-year yield to be smooth, quiet, linear, or does it get lumpy and ugly and nonlinear as you migrate to 5%?
I think lumpy and choppy is a good way to describe it. Right now, you have basically 1 year, 2 year, and 3 year all right on top of each other. And that's kind of an anomaly. I don't know that stays that way for a long period of time. As we move towards higher rates, 4.5%, 5%, you're going to see some choppiness and some lumpiness in your terms in that 2-year sector of the curve.
On single point duration, what are you doing? As Federated Hermes, are you coming in on duration? Are you extending out to pick up that yield?
We're actually not extending yet, but we are way off of our lows from a duration standpoint. So, we're basically median at this point.
Real quick here, Deborah, I'm curious from your perspective. We heard about the Treasury potentially, or the Federal Reserve, buying back certain treasuries at discounted prices to help with some of the functioning of the liquidity in this market. Do you think that this would help? Would this actually serve as some sort of ballast for yields, at least creating a bit of a ceiling in the near term?
I think the longer end of the market beyond, 2 years has been saturated to some degree with supply, while the short end of the Treasury marketplace, 2 years and under, and particularly 1 year and under where money market funds can buy, has, had extra low supply with a huge amount of demand. So to me, it would not necessarily be changing the amount of Treasury securities that are in the market and depleting it, but rather having more supply on the front end where a lot of the cash continues to reside.
Deborah, thank you so much. Deborah Cunningham with us with Federated Hermes this morning here on liquidity and on the yields as well. The 2-year yield we mentioned, 4.57%. Okay, it's distant from 5%, but I'm sorry, folks, it's still a shock to say that to you. The short term used to be LIBOR OIS, and now there's all this other stuff that Ira Jersey explains to me, and it goes in this year and
I can tell.
Comes out this year.
With your nap that happens with the auctions. Right now I am looking also at oil prices, and we talked a lot about this yesterday. How many people have come on this show and said that they're very concerned heading into this winter with where we're going with stockpiles, with where the SPR has been drawn down to the lowest levels going back to the early 1980s. There isn't the same kind of lever that can be pulled. What does that mean in terms of the inflationary push heading into year end?
The perverseness, and I'm not predicting this, folks, in any way, and I don't mean to be political in any way, but with what we heard from Brian Deese yesterday and Amos Hochstein about gaming whatever the strategic political reserve is, that on election day, Brent crude is at 100.
Well, I mean, this is, but how much control do they actually have over it?
They don't.
And it's not just the crude, it's also the distillate market. And I keep talking about diesel because if you look at diesel prices, they've gone up pretty significantly. And this is what people need for all of the trucking of all of the goods and heating homes, because a lot of them are fueled by diesel-generated engines. So how much do you really end up in a sort of tenuous situation, which we heard about from Kevin Book?
You were beating Brian Deese to a pulp yesterday, and all I could think about is they need a cup of coffee with Steve Schork of the Schork Report. We'll explain to the president, I'm sorry, sir, there's 3 major airports and 20 million people, and they heat with heating oil and focus on New York
They know
Harbor.
this. The problem is that they don't really have the tools to really deal with it. And so how do you
Why
deal
do we
with a
expect
political...
that they would have the tools to deal with it?
Right? So why is that the political expectation? And yet here we are, the litmus test of inflation, very much heading up on the gasoline stations that you see around the country.
How quaint. Let's look at predicted news here on Pivot Thursday, where there's any number of stories that are dynamic and moving. We have yet to speak of claims. It's weekly data. It's been a little elevated, but not that elevated. Is that the right analysis
We haven't
here?
really
50
seen,
minutes away?
we haven't really seen true weakness, and it's not expected to come out. I was looking at one.
A higher
report.
number is true
weakness.
weakness.
Higher number is better for the Fed, worse for the economy, ostensibly in terms of people perhaps losing their jobs. I saw a report yesterday. There are a significant number of people in the United States that are working several jobs in order to pay for inflation. How does this data capture that? How do you capture a very bifurcated workforce that has changed and changed significantly? This is one of the things that I keep reading about. What are we actually seeing? Is there actually more weakness in the market than we're actually observing?
And look at housing coming out later. Lisa, let's, I get it. We talk about New York too much. Cleveland, Ohio. Thank you, Cleveland.com. Up 8.5% in Ohio from a year prior.
You mean in terms of home prices? Yeah, they're not going down. But this is what we heard earlier.
That's
There's
a big
just
number
lack
on
of
your.
supply. And even though the mortgage rates the highest since 1990. At least
Housing data at 10 a.m. We'll have that for you as well. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Officials in China are said to be debating whether to reduce the amount of time people entering the country must spend in quarantine. They're considering setting the period to 2 days in a hotel and then 5 days at home versus the current 7 days in a hotel and 3 at home. The country's COVID-0 policy is leaving it increasingly isolated from the rest of the world. Hong Kong is reportedly looking to allow VIP bankers who test positive for COVID-19 during a gathering next month leave the city via private jet. About 200 people from global firms, including banks, security companies, and asset managers, are set to attend the 2-day HKMA summit. Infected guests without their own planes may be allowed to isolate in their hotel rooms. Malaysia will hold its general election on November 19th, with the Prime Minister's party looking to capitalize on a string of victories from local polls. The Southeast Asian country's election commission says a total of 222 parliament seats will be contested. Aluminum giant Alcoa is adding to the worries over the world economy. The company posted an adjusted loss of $60 million for what it called a challenging quarter, with significantly lower prices and higher costs for energy and raw materials. Aluminum has fallen by nearly half since reaching a record in March. And Hermes sales have surged as luxury shoppers in China return to stores after pandemic restrictions eased, snapping up those Birkin and Kelly handbags. Third quarter revenue rose 24%, excluding currency swings, topping analyst estimates. The results are more evidence that producers of luxury goods remain largely immune to the wider squeeze on spending. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
I think we're predicting, or at least the dot plot is predicting, that inflation will come down. It will be a disinflationary year in 2023. The median dots do call for further moves in 2023. So if you take that as the committee sentiment, there could be a decision to move that into 2022 at the December meetings.
I will not mince words. The doctorate from Indiana University has led an informative debate on a new Federal Reserve over his career at the St. Louis Fed. Bullard has talked about front-loading. He's talked about regime change and the rest. And you look where rates have gone, and Lisa, you've got to look back and say, what did Bullard get wrong? And the answer's not much.
Yeah, he has been on
Not
top
much.
of this, which is
I'm
the reason
sorry.
why the front loading really is gaining some traction. I'm watching a clock right now. 18 days, 16 hours,
Till
11
Ferro
minutes,
gets back?
and 27 seconds. It's counting down. Election day in the U.S. And we haven't talked enough about
We
this,
have not.
but this is really,
We're doing the London idiocy.
Yeah, fewer than
100%
3
correct.
weeks left at a time when the polls are moving so quickly against the Democrats in
Yes.
the face of some of the inflation. There was a quick pop, and then it seems to be evaporating. And Greg Valliere has been tracking all of this, Chief U.S. Policy Strategist at AGF Investments. He joins us now. Greg, thank you for making me take a look at this clock, 18 days, 16 hours, 10 minutes, and 56 seconds. How quickly are these polls moving against the Democrats?
It's really quite a story, Lisa. In the last couple of weeks, there's been a shift of Hispanic voters to Republicans. There's been a shift in the polls showing crime is a much bigger issue, and a surprising shift showing that abortion is in the middle of the pack. It's not a big issue. These are dramatic changes, and you have to conclude that a landslide is likely in the House.
Greg, I have been dying to talk to you. I am suggesting that the gentlelady from Hawaii, Gabbard, exiting the Democratic Party is a huge deal. Forget about the libertarian angle. Are moderate Democrats going to exit the progressive Democratic Party here post-election?
They have a huge identity crisis. You've got Bernie Sanders, who's 81, who's itching to run again. We'll see about Elizabeth Warren. She has to win her Senate seat in Massachusetts. But there's a place for moderates in the party, but there's going to be a brutal post-mortem. Why did we lose? What didn't we emphasize enough? And the biggest question of all, Tom, is what about Joe Biden? Does he announce?
Okay.
Maybe,
But
right?
come on, Greg, give the Republicans some credit here. What did they get right in the last 4, 5, 6 weeks?
Well, inflation, I mean, I don't know if they got that right, but they certainly emphasized it. And in the final analysis, that will be the big issue. The fact that Joe Biden is perceived by the public as not doing much.
Greg, I'm gonna step on you here. I think this is really important. Tulsi Gabbard's comments were stunning. I mean, is woke dead for the Democrats?
It should be, and I'll tell you who else hinted at that, and that was Barack Obama a few days ago. He said we've gotten too infatuated with all of these, niceties and what we can say and what we can't say. So it's not just her. There are a lot of Democrats who feel the party has veered off a cliff.
Well, and this actually speaks to the shift that we've heard in tone in terms of exports to the European Union, in terms of support for Ukraine. There has been a subtle shift heading into the winter during a perilous time for the European Union, where the U.S. is saying we want to protect ourselves. How much is that going to really feature not only in the election, but in the political zeitgeist after?
This is a story to watch, especially for Western Europe. Could it be that the resolve in the U.S. could fade a bit? I don't see us being there yet, but many Trump Republicans running for the Senate are now openly saying, we don't want to give any more aid to Ukraine. It's not a majority, but if this starts to catch on, that could send a signal to Vladimir Putin that if he just waits long enough, he might get what he wants.
But it's not just the Republicans. I mean, even the Democrats. Yesterday, we heard from the White House that they may be considering restricting exports of diesel to Europe, or restricting exports of natural gas because of what the U.S. is facing itself to lower prices for consumers. I mean, how much is becoming an increasing bipartisan pressure in the face of inflation?
Yeah, and you also see protests in Paris and elsewhere. So is the Western resolve starting to falter? I would quote Margaret Thatcher, her wonderful quote when she said, this is no time to go wobbly. The Ukrainian army is still advancing. But this issue is going to be a big one in Washington after the first of the year.
Greg, I think our global audience would ask, the tradition here of a beleaguered president is to turn to the vice president. I basically hear within your world radio silence on the vice president. Give us an update.
I have to say, in both parties, there's a consensus that Kamala Harris has been a disappointment. So if Joe Biden does announce he's not seeking another term, there's a vacuum. Who fills it? Gavin Newsom? He's got his problems in L.A. and San Francisco. There's going to be a real vacuum, I fear, for the Democrats.
Greg, save me some time. I'm watching too much baseball and not enough politics. Which Senate race is Greg Valliere focused on?
Well, Ohio's fun to watch. Pennsylvania's fun to watch. But I'll give you a sleeper. That's Nevada, where a Democratic senator is in real trouble. And if she loses, that makes it really tough for the Democrats to have any chance of taking the Senate. They might lose the Senate by a seat.
Greg, don't move. Lisa, you still got the clock up here on the election. Give me the clock here on the election.
Hold on a second. It's 18 days.
18 days, whatever. We got to talk to Greg
second.
Vallier 3 times within the countdown clock. We're going to have the Vallier countdown clock as well.
It's amazing.
He's with AGF Investments Toronto with a brilliant morning note. Get that through AGF Investments. I read it every morning. Greg Vallier, thank you so much. Folks, we're looking here at the Bloomberg screen. We've got 3 or 4 major stories this morning to get you through the Bloomberg morning. And Lisa, I'm going to go to where I've always gone, which is to see the 10-year real yield 1.70%.
Wow, really?
It was there for a cup of coffee. Vallier was talking about Nevada. There it is. It's 1.70%.
Wow, look at that.
And the 10-year real yield, it's not up through new highs, but still, that dominates everything. And frankly, for Liz Truss as well.
Hold on a second. That is the highest, if it stays, since 2009. So we keep creeping to new post-2009 highs at a time when people just a couple months ago were saying 1.5% on the real yield was enough to torpedo stocks. We have seen a somewhat of a rally, although it's really kind of tepid. How much does that become a game changer over the long term? When do you start to reset? What do you call it? Zombie roll-ups?
Zombie roll-ups is my phrase for next year. If I was to write, I think you're going to see with a risk-free rate coming back, and that folds into the 10-year real yield. Abramowicz correcting me on air. You're right. On a daily basis, a 1.7012 is a new high for that real yield. But with this new math, which is the old math of my ute, that's where the zombies disappear.
Well, and this is something that we have seen in certain pockets of the equity market. You haven't seen it in credit. You haven't seen it in the high yield space.
Tell me about high yield right now.
Right now, you are not seeing the same kind of spread widening that you're seeing in other places.
Credit deterioration.
Credit deterioration. There isn't the expectation for some sort of massive default cycle. Does that start to change? You're starting to see investment grade yields actually completely underperform because of the rate component. I don't know.
My number I'm looking at, it's an amateur take, folks, just an opinion, 2.05% on the 10-year real yield. We're not near it, but we're moving there quickly. Futures up 8. The VIX still above 30, 30.73. We are watching London with Guy Johnson and Lizzie Burden. This is Bloomberg.
The U.S. economy still looks somewhat overheated.
For the moment, I haven't seen enough evidence that there's been any sort of break in the way things function.
I think there's going to be this big drag on the economy.
The consumer, as we all know, is the workhorse of the U.S. economy, and I think we've got to watch some deterioration there.
The U.S. will join this recessionary crowd in the early part of 2023. I think it's just a matter of time that we start to see consumer spending come down.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
The U.S. economy still looks somewhat overheated.
For the moment, I haven't seen enough evidence that there's been any sort of break in the way things function.
I think there's going to be this big drag on the economy.
The consumer, as we all know, is the workhorse of the U.S. economy, and I think we've got to watch some deterioration there.
The U.S. will join this recessionary crowd in the early part of 2023. I think it's just a matter of time that we start to see consumer spending come down.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Welcome back. Watching rising global yields, watching earnings, watching ahead of lettuce in London. This is Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowicz. John is out on a well-deserved day off. He is not writing about playing footsie with the Dow. Tom, political turmoil in the face of market regime really is the mood of the morning.
Sterling 112.53 rebounds here off of what we've heard from Guy Johnson and Lizzie Burden. I think it's a distraction to the markets, but as Guy said, it is, again, within my exhaustion of watching the soap opera, new political theater for the United Kingdom.
It's new political theater on the heels of market regime change, and it comes with the yield story that we've been talking about for months that seems to only be accelerating with yields going up, CPI surprising to the upside in the U.S., in the U.K., and Canada, and his response in markets.
And the other thing is to look forward. I believe you said 18 days to the election, and Greg Valliere saying we're going to see the same turmoil in America. He's seeing a massive shift towards the Democrats.
And you're hearing a shift toward the Republicans away from the Democrats, and also really concerned about inflation, talking about fiscal discipline, and we're hearing about that again and again. At what point do we see some sort of peak hawkishness, peak yields? We already have talked about that and then blown through it. 5% now, baked into market expectations for Fed funds rates in the first half of next year.
And the housing statistics, which we really haven't talked about much this morning, housing data here at the 10 o'clock hour, and with a mortgage rate 7-ish, let's call it, who's counting, it is a changed world. I'm going to go back to the boring data point, Lisa. The 10-year yield, 1.70%. The real yield, rather, is extraordinary.
1.7%. You highlighted this before, which is the highest level going back to 2009. And this is the reset. This is the great reset that people have been talking about. Dollar strength, although a little bit is moving away today, given some of the developments, the stabilizing developments in the UK, as well as what's going on in Europe, the Euro 98.14.
Dean Kern at Publishing moments ago, yields are breaking out. He continues to see the same trend that Jim Bianco will tell us about here in moments.
Yeah, exactly, which is really the reason why people are completely resetting their expectations. I wonder how crude folds into this. We were talking a lot about oil yesterday.
Yes.
We did see a decline in gasoline prices. This pulled back some of the expectations for inflation, then a stabilization, then an increase, an attempt at an administration response, but crude right now higher, right? $87.33 WTI. You're not impressed. However, we're a far cry from the $67 to $71 or $72 where the trader that is the U.S. government's going to step in.
Well, or the Biden administration. I'm not going to pin that on the Department of Energy. I'm looking, this chart's too fancy for TV. Everybody will turn the channel, and the radio, they'll drive off the road. I can't give you a technical path to 100 on Brent.
Yeah.
My problem is nobody's looking at that. They're all looking the other way.
But there is this great reset, and I'm really glad that we do have Jim Bianco on as we really not only look to earnings, but what this great reset in the yield space means for the broader economy. And Jim Bianco joins us now. He's president of Bianco Research. Jim, how much do you start to look at a 5% Fed funds rate next year and say, maybe that's not even enough?
Oh, I think that could very well be the case. First of all, as historical example is the 2-year yield always peaks above whatever the terminal rate is. So if the terminal rate's 5%, it should, before the cycle's over, go above that. And if the terminal yield keeps going higher, you keep resetting the 2-year yield higher. But it really comes down to inflation. Is it persistent? And let me be clear on persistent. Yes, there's signs it's peaked. And yes, there's signs that inflation is coming down. But if it stalls out around 3.5%, 4%, then these yields are appropriate. If it's on its way back to 2%, then these yields are too high. I do fall into the camp that we're probably going to see persistent inflation and that these yields are not all overdone, at least not yet.
Jim Bianco, all of us have lived the John Taylor Great Moderation. It's been decades. You and I remember 14% annuities, 10% double-digit yields, on and on and on. We don't have a collective experience of going the other way. What do corporate profits do if we move the other way to a higher yield regime?
Well, not only don't we have any experience going the other way, we have pretty much structured a lot of the financial market on the assumption that we were going to stay with low stable rates, a great moderation economy, and no inflation. Liability-driven investing in the UK being the headline child right now, and there's probably more to come. I think that as we move forward, we're going to find that this is going to be an even tougher environment than people think. And I've been advocating something I've been advocated for a long time. This might be the return, to use the Wall Street term, alpha. This might be the return of stock pickers and bond pickers, as opposed to just buy an index and wait for it to go up. You have to pick individual companies that can survive this environment, because not all energy companies will do well, others will. And no one's really ready for that kind of environment because it's been so long since we've had to do it.
Jim, you were 15 years old when you were at First Boston. I mean, it was a few years ago, to say the least. But the bottom line here is the overlay on that is transactions and combinations. I would suggest merger 2023 may be the headline.
It could very well be, because with this new environment, there's going to be opportunities for companies to pick up other companies that are not positioned for it, and companies that will strengthen. You know, another Wall Street term is we're going to see the dispersion of returns be much wider than we've seen in the past. So it's not going to be enough to, just like I said, buy industrials. You got to figure out which industrials to buy. This is a big change from the last 20 years.
I understand that there is this sort of bond stock picker bias right now because of the new regime change in both yields as well as just a broader economic shift. However, I've been really struck by what's going on in the high yield bond space. It has been so resilient. People seem to be saying companies are just doing fine. They have a lot of cash. This credit cycle is going to be a lot different and a lot less dramatic than previous ones. Do you agree?
Well, I agree to some extent, because first of all, remember, the high yield space is largely a space of industrial companies, manufacturing companies, energy companies. Those are the companies that are doing well, where the stock market's more of a space of growth companies like technology companies. And when you get into the NASDAQ, unprofitable technology companies, those are the companies that are struggling. So that's definitely helping the high yield space. And the other thing is large nominal growth. When you have high inflation, these companies will see their bottom lines go up. Whether they can beat the inflation rates, another question, but at least their growth rates will continue higher.
Nice analysis, Jim, but what does that mean for bonds? If I'm a bond person clipping coupons, folks, for those of you younger, scissors, Bianco sitting there with, the electric company of Chicago clipping a coupon, bond people don't have that advantage of the bright lights of nominal growth that corporations have.
Well, that's right. For a bond investor, it's all going to be about rates, and it's all going to be about moving yields higher. Or, this is something new. We've got yields that we've not seen before, and I think we're going to continue to see it. And that should be the focus. And I think that's where the focus is on higher rates. Yes?
Well, no, but Jim, before we let you go, I'm curious about whether we see a lost decade in this kind of regime. I understand what you're talking about with respect to specific bonds or stocks doing well. But on an index level, are we going to see meandering returns for equities because of this fiscal discipline and higher rates that completely change the value proposition?
Yes, that's my fear, is that it's a post-pandemic economy that needs to change for the new world. It's a work from home world. The supply chain still needs to have some work. We still need to figure out what we're going to do with China. And for the next several years, it's going to be a complete restructuring of what we've seen. That means indexes sideways. That means yields higher. That means great opportunity within stocks and within bonds. That, like I'm going to emphasize, that's not what it was in 2010 to 2019. So yes, indexes sideways, but there will be opportunities within it.
Jim Bianco of Bianco Research, thank you so much. And I kind of want you to stay here for what's coming, because I can just feel Tom Keene's energy and the vortex of my gloom is getting him to throw his tang at me. I mean, honestly.
You got to be kidding me, Lisa. This is the greatest, to the bulls out there, when they hear people talk about the coming lost decade, that's the precursor to the reformation of a new bull market. I mean, the toxic brew of a lost decade. I mean, you got to be kidding me.
Okay, look, you can say that this is just gloomy, but you could also say that when you take a look at tech valuations and where they reset to based on where the nominal and the real yield are currently, if we're in an inflationary regime, it's hard to see the index level case in the same kind of way as specific names, which is the whole point.
I'm going to go to the major insight there from Jim Bianco, folks, which is you go back to stock picking where alpha matters. And you and I see that in the earnings where, I get it, it's volatile, but United Airlines launching on all cylinders. And Alcoa's out there going, maybe not.
Right. And this is the reason why people are saying stock or bond picking. Getting it right, though, has always been challenging. And people have been saying this for the past 10 years. And every time the index seems to outperform if you strip out fees on an average level. Is this really going to be different? And if it is, what happens to ETFs? What happens to passive investing? What happens to the entire thesis that's transformed the investment management model?
Into claims in 19 minutes. We're going to come back and look at the toxic brew of a lost decade.
Okay. You know, am I going to be dealing with this all morning?
Toxic brew of claims.
I'm watching lettuce.
Claims, I don't know which way they go. They may show you tilting towards a toxic brew of a lost
If you keep this up, then I'm going to start talking about
leave
bad
too.
news being good news. I'm going to give my paper, dissertation.
I'm going to be here doing a monologue. People will drive off the road on Bloomberg Radio.
Dissertation on toxic
Futures up
brew.
6. Dow futures up 114. The VIX a rock solid above 30. Stay with us from New York. And Lizzie Burden in London. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Liz Truss invited key Conservative Party lawmaker Graham Brady for talks at 10 Downing Street, fueling the sense that her premiership is near collapse. Deputy Prime Minister Theresa Coffey and Party Chairman Jake Berry were also at the residence. Yesterday, Truss fired one minister over a security breach, and 2 others were heard resigning amid a fallout from a Commons vote before agreeing to stay on. Chinese chip makers extended gains today after Bloomberg reported the country's top technology overseer convened a series of emergency meetings this past week with leading semiconductor companies. The talks were said to be for assessing the damage from the Biden administration's sweeping chip restrictions. French President Emmanuel Macron has used a fast-track decree to push through his budget. The action came after the bill was debated in France's National Assembly for several days, during which it became clear it wouldn't secure enough votes to pass. Macron's centrist grouping is nearly 40 seats short after losing its majority earlier this year. And your morning caffeine kick may soon cost less. Vietnam, the world's biggest grower of the Robusta variety of coffee used in instant coffee and espresso, reports there will be a larger crop this season, adding to the global supply. Generally favorable weather and the replanting of old trees have boosted those yields. And Netflix top executives continue to battle it out over releasing more of its original movies in theaters. The Wall Street Journal reports some argue Netflix is leaving hundreds of millions in box office receipts on the table by showing select movies in a few theaters for a few weeks, while others feel theater showings create buzz for the streaming service. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
Wages are going up, and that's not a bad thing. But if it gets caught up in cost price spiral, that would be bad. And so making sure that we've got monetary policy at a sufficiently restrictive stance so that we're not inducing inflation, we're trying to get it down.
Charlie Evans there, Chicago Fed president, speaking among the role of Fed speak that we've been hearing. I do want to bring this to you. Sky reporting that there will be some sort of statement from Downing Street at 1:30 p.m. London time. That would be in about 10 minutes plus or minus over here in New York. And how much is this going to be what Jim Bianco said, where he's long lettuce, not Truss?
Well, I look at this and I go back with my faulty memory. It's unfortunate John's not here, but to Mr. Cameron coming out on short notice. And my basic take, Lisa, is the British are way more abrupt about this than the Americans. Things happen faster over there than they do in a media-managed Washington.
UK, US, faster. Either way, this has been warp speed, even at a faster pace. Yeah. I mean, this has been absolutely revolutionary in terms of its speed, as well as the fact that it's really come on the heels of market movements. I mean, that to me also, the market has just disciplined the political regime in a way that we've not seen.
On television, give me an intraday on sterling as you can as well. And what you see is sterling is not launched. That's not the right idea, but we've moved from sterling weakness up to some real sterling strength, getting out well above recent resistance. 112.70, a 113 print there would be something about this announcement. At 18:19, Wall Street time. Good morning on Bloomberg Radio and Bloomberg Television. We're going to double barrel this as we look to the United Kingdom. Lizzie Burton is at 10 Downing Street, but also in 10 minutes, we have claims in America. Kathleen Bostjancic is going to join us now, Chief U.S. Financial Economist at Oxford Economics. And what we're going to do is keep Kathy here on claims, go through claims. Makia's down in Houston watching a baseball game. Hope that works out for him as well. Guy's in place as well, Guy Johnson in London. Kathy Bostjancic, I need a clinic on claims. What is your statistic to say claims have shifted? Is it 230? Is it 220? Dare I say 250? A higher number is a grimmer number. What number matters to you?
Good morning, Tom. Happy to be with you and Lisa. It's not so much the level, but the change in claims that we'll be looking at. Certainly if we get a large increase this morning, that somewhat could be reflected of the hurricane in Florida. So we'll have to dig through and look at the state data, although there's some delay in that reporting. But as we go forward, we would anticipate that claims are actually going to just gradually increase, even if we do head into recession, which what we expect, just because employers have had such a hard time finding skilled and appropriate workers. They're not going to immediately start to let them go. What they'll probably do is just pull back on new hires, and that alone will start to make net payroll gains slow.
Does this mean that the initial jobless claims no longer matter, Kathy?
They certainly do matter. It's just our expectation is that we're not going to see a large run up as maybe you would see in previous recessions. In other words, maybe this claims, which is typically a leading indicator, maybe it becomes more coincident and lagging. Now, we'll have to see how that plays out, but that is sort of, I think, the thinking right now.
Right now, we want to show you some film here. We've got 10 Downing Street. They're putting the podium out. The two guys just brought it out. They bring it out on a board and rollers, and there it is, and it is always a sign of change within the United Kingdom government. We'll have more on that with Guy Johnson here in a bit. Kathleen Bostjancic on the change in the American labor economy. Kathy, how does this dovetail into that jobs report early November?
Yeah, I think we're going to see net job creation continue to slow. I think there's enough uncertainty with corporate America of what's coming that they're going to hesitate and be more cautious. And I also, let's be realistic, the pace of job gains that we saw right after kind of the end of the COVID recession weren't sustainable, right? That was catching up and filling in the gap, the large gap that we saw during the COVID downturn. But going forward, I think it's this uncertainty that weighs on corporate leaders is going to get them to pause a little bit. And we'll also see those job opening numbers start to recede as well.
Given the pace of how quickly the market narrative is moving, is there anything in the underlying economy that gives you a feeling that we could be in recession now or headed to a rather deep one based on some of the pricing of certain stocks and some of the guidance that you're hearing out of Wall Street analysts?
Well, certainly the equity market is also a leading indicator. And we do need to respect that along with the yield curve. With that inverting, traditionally that has been a sign of recession. It doesn't tell you much about the depth, though. So that's, even if the yield curve inverts further, it doesn't tell you that we're going to maybe contract 2% instead of 1%. Our own view is that we have somewhat of a mild, moderate downturn, peak to trough about 1%. If you exclude the great financial crisis and the COVID downturn, the average post-World War II downturn was 2%. Right. So it's about half of that.
Kathy Bostjancic of Oxford Economics, you're going to be sticking with us through the jobs claims. We do want to get a sense of what's going on over at London right now, where they are setting up the stand and the microphones, the podium, as you pointed out, preparing for that statement.
Yeah, they are. They're setting it up with the usual thing. This is not Liz Truss, if we can go to that right now, but we make jokes about it, but this is really serious for this nation. And of course, we have seen this. I'm going to go back past Theresa May to David Cameron. I'm sure John Farrow could go back much longer, but I'm exhausted by this. Can you imagine the cross-section of people of the United Kingdom just
I mean,
it's like Nixon for 4 years is sort of,
been consolidated into 3 days.
Yeah.
I mean, this whole idea of how quickly she proposed a plan, she got a slap down by the markets, she got a slap down by her fellow Tory members, and now a lot of people are expecting her to resign. What comes next? This isn't the end of the turmoil. What comes next, and what kind of fiscal leeway do they have, given where we are with respect to borrowing costs and where we are with respect to inflation?
Guy Johnson has given us a sense of that, and his theme is that we have separated much of the economic battle from the political battle. And I see it with Sterling 112.79. We're not going to give you, we're going to move the podium here. Speech over. I'm kidding, folks. On radio, they're now out tweaking the podium
Melissa McCarthy's
to line
turning.
it up to a 16th. Yeah, it's a Melissa McCarthy act. They're going to line up the podium to a 16th of an act. We're going to have this in serious conversation with Guy Johnson about a moment in the history of Britain. On Sterling 112.80, Lisa, 112.80 is not where we were earlier this morning.
There was talk of parity, and now we're further away from that at a time of a little bit of stability. 10-year yields, 4.1%. This is Bloomberg. This is Bloomberg Surveillance. We are awaiting U.S. data, but we are more awaiting what is happening in 10 Downing Street, where we are awaiting for some sort of statement, potentially Liz Truss stepping down. We, Tom, are getting all sorts of messages about perhaps the lettuce one.
Well, there's a zeitgeist that's on there. Guy Johnson standing by as well as we wait for this moment in British history, but with claims out with an extremely good number, 214,000. That's a constructive number from 228. I don't have the revision yet.
Yeah.
Down to 214 is a number that I'm going to call that not Jerome Powell friendly. We're going to stay away from that right now. Equity futures lift on that. In yields here, I'm going to call it churny. Maybe yields pull back a little bit, 4.56 in the 2-year and the 10-year, 4.11%. I'm trying to squeeze this in before we go to the moment in history. Lisa, let us regroup here, and I will go to the day. John Farrow did 9 hours on TV on Brexit, and as somebody emailed into me, how much of this moment and the moment of Theresa May redounds back to this arch debate of England, the United Kingdom, extracting themselves from Europe. How much is that really what we're talking about today?
The post-Brexit turmoil, I'm sure, will be a discussion for the history books. Also, the post-pandemic playbook at a time when inflation is one of the most important problems pressing a nation. Really, her agenda was to cut costs and to cut taxes, or not cut costs, increase costs and cut taxes. It failed, at least with the market's eyes.
On radio, on television, we show that Beth Rigby, always informed, says the prime minister, quote, is about to resign. That, according to Sky Television. Guy Johnson is in London. Guy, we're going to stay on 10 Downing Street on TV with a podium set up a good 25 feet from that acclaimed black door. Guy Johnson, if the prime minister resigns, what happens next?
That we don't know, Tom. How is this process going to unfold? I think it's probably just been decided inside Downing Street. We've had this meeting taking place. You've had the chair of the Conservative Party in there. You've had the Deputy Prime Minister, Kofi, in there. You've had the chair of the 1922 committee, Mr. Brady, in there, Sir Graham Brady, in there. And I suspect they've been working out how this process is going to unfold. It's not just the 22 rules that need to be changed, the 1922 committee rules to be changed. Other rules need to be potentially altered here as well. I don't know what the process is going to look like, Tom, but what is clear, judging by the shot we have up on the screen in front of us, is that something is about to change.
We welcome all of you on Bloomberg Radio and Bloomberg Television to this historic moment for the United Kingdom. Guy Johnson in London with our government team as they report this story. Lisa Abramowicz and Tom Keene. Tragically, I'm not kidding here, folks. We make a lot of jokes. We have a lot of fun, but just too bad. John Farrow is off today. We look forward to his perspective in the coming days. Lisa, I look off claims at a higher real yield out to 1.71%. But separate from that is the economics here of stronger sterling and more stability for the next United Kingdom government?
Well, more stability for now, which goes to the question which you rightly asked, Guy, what comes next? For all intents and purposes, over the next 2 weeks, 3 weeks, 4 weeks, is the United Kingdom going to be run by a technician, by Jeremy Hunt, who has taken over as the Chancellor?
Now we're going to have to see here. And here we go. And now the door opening at 10 Downing Street, and the Prime Minister walks to the podium in silence. Let us listen.
I came into office at a time of great economic and international instability. Families and businesses were worried about how to pay their bills. Putin's illegal war in Ukraine threatens the security of our whole continent, and our country has been held back for too long by low economic growth. I was elected by the Conservative Party with a mandate to change this. We delivered on energy bills and on cutting national insurance. And we set out a vision for a low-tax, high-growth economy that would take advantage of the freedoms of Brexit. I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party. This morning I met the chairman of the 1922 committee, Sir Graham Brady. We've agreed that there will be a leadership election to be completed within the next week. This will ensure that we remain on a path to deliver our fiscal plans and maintain our country's economic stability and national security. I will remain as Prime Minister until a successor has been chosen. Thank you.
Liz Truss turning to 10 Downing Street in the door and returning in to piece together a fractured government. Our Guy Johnson in London. We're waiting for John Micklethwaite to join us as well, our editor-in-chief, with all of his experience of the politics of London. Lisa, your thoughts of this moment?
Well, Liz Truss is about to become the shortest ever serving prime minister. She is stepping down. We were talking about this earlier at a time of incredible turmoil. She accepted the prime ministership from the Queen and handed in her resignation to the King.